The views expressed on the Nova Society are those of the panelists and guests and do not necessarily reflect the views or opinions of the Phoenix Research Institute or any institution which any panel member is associated. Welcome back to the Nova Society, a space where dialogue deepens understanding and civic responsibility comes to life. I'm Dr. Mark Bound, joined by our regular panel, Dr. Scott Gershwer and Dr. Brooklyn Ann Weldon. Together, we'll unpack the stories that matter most, exploring the headlines, the history, and the big ideas shaping today's conversations. Let's dive in and hear what the panel has for us today. Brooke, what do we got for today?
Oh, we have a number of excellent questions. As always, thank you to all our listeners. We will start with Tori from Scranton, Pennsylvania. And Tori asks, I was reading a report that stated that the Fed is divided and preparing to consider lowering interest rates. I'm a little confused as to what impact this might have on our economy. So, should they lower the rate? If so, by how much? And can you explain what the effect might be of reducing the rate or keeping it the same? Will this help prices come down? That is an excellent question, Tori. Mark Scott, as none of us are economists, what do you say?
But Scott, we can say, although people can't see it right now, Scott's got his New York Mets sweatshirt on, and it is a very sporting sweatshirt you've got there, Scott.
It's a very oversized, very comfortable, and I'm pretty sure I'll never wear it outside the house again after what happened yesterday. For those of you who don't follow, the Mets let go Edwin Diaz, their closer, a fan favorite who people would go to the ball game just hoping to see him come out of the bullpen and run to the mounds with the lights off and trumpets playing and everybody singing and clapping their hands. It was just great. And he's gone for $3 million a year for 3 years. The Mets offered 36 over, I forget what it was, 36 over 3 years, and they offered 39 over 3 years, and he never came back to them and said, do you want to match that offer or beat that offer? He just simply signed with them. And I think when you're the Mets, you have to expect that kind of thing to happen, that people are going to go to the highest bidder. I mean, at least he didn't say, I want to be with my family or I make some kind of lame excuse. The Dodgers have won the last 2 championships. The one thing that they were lacking was a bullpen help. They actually had their starter pitch again the day after his start in the World Series to close out the final game of the World Series. And now they have arguably the best closer in baseball. And so they got what they wanted, and they got him for $9 million over 3 years, more than what the Mets were willing to pay for him. And it is outrageous. This team is getting worse, not better, and they were already a disappointment.
Yes. They were. I don't deny it. But interest rates. What do you think, Scott?
So I think there's two things that need to be addressed. First of all, the way Alan Greenspan, when he was the chairman of the Fed, used to put it was, if the party gets too hopping, I'm here to take away the punch bowl. So if the stock market's doing really well, and if the money is flying around the room and everybody has too much money, the Fed is supposed to go there, raise rates, take some of the money out of the room, and quiet everybody down for a while. Pass out the books. Everybody sits on the couch and reads a book for a while. No more partying. And so that's basically the job of the Fed. They have a weird dual mandate. One of them is to keep unemployment down. The level that they like to keep unemployment down is below 5, I think, is considered full employment. Below 4 is great. They've done a pretty good job with that. The other mandate is to keep inflation down, and the arbitrary but agreed upon a rate of inflation has long been 2%. Not sensible in any way. It doesn't really mean anything. There's no cause for it. There's no data that backs it up. But they've been very clear for decades now that they want a 2% inflation rate. And right now it's higher than that. It's almost 3%. And so you would think that the Fed would not lower rates today to try to knock down that inflation rate. But at the same time, they've got to keep their eye on unemployment. And unemployment, from the best data we have, which seems to be coming from, what's the name of that company? ADP, because the government is not releasing their numbers. ADP says that jobs are down and unemployment is ticking up. So that's a hard thing to do. One thing about Jerome Powell, I think, has been in his tenure, he's been really good at making sure he knows who wants to do what in the Fed. I forget how many people there are, 36 people that meet as in the Fed whose opinion matters. And he talks to them all. He'll do behind the offline meetings with them individually if he has to. He will build consensus, and he's finding it harder and harder to build consensus. So I don't know what's going to happen today. I mean, my basic feeling is that this is not a great time to lower rates, but they probably will, because Trump hollers about it. Every president wants lower rates, by the way. I mean, this is not unique for Trump. But what is unique for Trump is that he wants to control the Fed because he seems to believe that he knows better than they do, and that he wants to control it. And that has never happened before. It's a really bad idea. He's going to install Kevin Hassett, who's a yes man to the max. I mean, his nose is buried so far up. It would be anybody, but it happens to now be Trump's. But that he'll do anything for him. And when he was asked questions about rising prices, he just takes the party line and says, "Oh no, you don't understand. This was Biden's problem that we inherited, and we have to do something about it," or some nonsense like that. And Kevin Hassett's a really scary idea for a Fed chair. Just as scary, if not even more scary than some of the ones that Trump has tried to nominate in the past and failed to. I can't remember the guy's name, but thank God, what a moron he was. And so the bigger picture is that this Fed has only a short period of time left. In 2026, Jerome Powell's term runs out, and Trump gets to appoint a new Fed chair. It's going to be a yes man.
Yeah.
And so what happens today, I have no idea yet. It's only 12:43 our time. We won't know until probably 2 or 3 o'clock, maybe not even until after the final bell of Wall Street. But I think everybody is expecting a lowered rate today. And I'm not sure it's a great idea. It's not. I don't expect 2 points, just a quarter point. But that's kind of where it stands today.
Right. Yeah, and Tori, my comment is that we all have to remember, we talk a lot about this thing with the Fed, raising rates, lowering rates. To the average American, you won't notice anything. You won't notice a thing. This really is, as Scott mentioned, the ones that are watching is Wall Street, and business watches the rates. I mean, where it's at, because that's the money, that's the prime lending rate. And even if you watch your commercials where they say, if you're a well-qualified buyer, you're still not getting the prime lending rate, probably. So this really only matters to them. Will it have anything to do with prices? Not a single thing. I don't see it as having any impact on prices whatsoever. The general idea, and with like trickle-down economics, which came from Reagan's time, which was a dumb idea. The idea is that, well, if we lower the interest rate, that allows industry and businesses to spend more money because they can borrow money at a lower rate. That only helps workers and the consumer. The bottom line is it doesn't. It's it's betting on them being generous with their profits, which they're not. So you're still going to pay the same amount of money at the gas pump, even if ExxonMobil gets a deal, as far as being able to build something cheaper for the corporation, but they're not going to pass it on to you. And I think that's one of those things that we have to remember, that, Scott has made this point so many times. One commodity that we have here in the United States is that we are consumers, and we consume. And we don't care how much it costs. We'll bitch. We'll piss, we'll moan, we'll whine, but we're still going to pay for it. And so I'm looking at some of the things, and I mentioned this last week. I went to the grocery store. I got stuck going, and I got a roast, just a regular beef roast, nothing special, $11 a pound. Now, the most I've ever spent for a chuck roast was like $4.50 a pound. My question is that, let's say the tariffs go away. What makes, that supermarket drop the price of that roast beef? Because I'm willing to pay it today. I'm probably going to be willing to pay it tomorrow. So when people, think that, this is a trickle down kind of thing, and this is the attitude people have about the Fed and interest rates, as it's something that's going to trickle back to us. It doesn't. It has zero impact. What it does is, as Scott mentioned, it does, help with unemployment, which is what the Fed is all about, making sure that unemployment stays at a certain rate, making sure that inflation stays at a certain rate, which, again, arbitrary number there. Don't know who came up with it, but there you got it. That's their function. But to the average American consumer, has zero impact whatsoever. What's going to have the bigger impact is that last week I was more than willing to pay $11 a pound for a chuck roast. Because now, as I say, what incentive is there for Ingalls Market to say, oh, you know what? Okay, no more tariffs, beef's cheaper again. Hey, he was willing to pay it last week. He'll probably be willing to pay it this week. And all he's going to do is bitch and piss and moan and whine about it, but he'll still buy it.
Yeah, well, I mean, that's the troubling part to me is that when Trump said the other day at one of his, I don't know what it was, press conference, whatever these things are that he's doing, he said, hey, you might not even have to pay income taxes soon. Boy, is that a scary statement coming from him, because none of us like paying income taxes. But I'll tell you this, income taxes is a sign of a sound economy and a good government. Income taxes means that we've all got some stake in this game. We've got skin in the game. We are paying for this government. We want to have say in what happens, a representative government. What happens in a lot of states that exploit natural resources from the state itself, not individual companies, is that the state gets to decide who gets what. And, the collapse of Venezuela in 2014 was not because of socialism. It was because they're a rentier state based on a petro economy. And when the petro economy fell apart, the state fell apart. And it has been a basket case ever since. And now that's going on, 10, 11 years now. Massive amounts of people exiting what had been a really, really good country to live in. It's just a shame what happened to Venezuela, and it could happen to any country that has a government like that and an economy like that. And we do not want that to happen here. And it's happening. It really does seem to be happening.
Well, yeah, and I agree. It's the problem that we've got is that other than consumerism, we don't have a natural resource that we can rely on. And whatever one we have, whatever we became a rentier state, whatever resource was being exploited is not sustainable. So as Scott points out with Venezuela, once oil went bad, as far as the industry is concerned, there went the country. And when we think about things like, Saudi Arabia, when we think about countries in the Middle East that rely on oil, they're basically in the same boat. So, they rely on it. I mean, really, what would Saudi Arabia produce if it wasn't for oil? I mean, how much stuff do you get from Amazon.com that says made in Saudi Arabia? Absolutely nothing that I've ever seen, or made in Iran, or made in any one of these places. Everything is made in China. So again, it's a precarious thing that we're looking at here. Will the rate come down? I don't know. Maybe, Tori, it'll come down. If it does, you won't notice it. Did you notice it the last time? I didn't. Prices are still going the way they're going. So I would say that no, this is not going to help your prices, and probably it is a bad idea to drop it. Why not just leave it where it sits right now? Because the only people that benefit, Wall Street and companies, and that's the only ones that benefit from this.
I agree, Tori, with both Mark and Scott. And I've been thinking also that, again, the bond market is really strong. And a couple of days ago, Scott Bessent, who ought to know better, and I'm sure he does know better, was saying, oh, how wonderful the bond market. And people put their money into bonds when the government appears to be unable to meet its financial obligations. So having a strong bond market is not a marvelous outcome. And right now, the U.S. bond market is apparently quite strong once more, as it was, I think, last summer. And the other concern that I have is Trump's talking about how mean and terrible now Saskatchewan is, the province of Saskatchewan in Canada, and that is where we in the United States, our farmers, get most of our potash from, and potash is fertilizer, and we need that for our crops and our food. And Trump wanted another one of his press conferences that I just grit my teeth and try to force myself to listen to, was talking about putting massive tariffs on potash coming from Saskatchewan. And so I think we're much more likely to feel the outcomes of high tariffs on fertilizer that will have another effect on the amount of food that can be grown in this country, and that will have an effect on grocery prices again. Then whether the Fed drops rates a quarter point or leaves them the same, and also the appointment of someone who's just going to do whatever Trump says, like Pete Hegseth, like Pam Bondi, like Kristi Noem, like Tulsi Gabbard, like the rest of them. And look at all the problems that have been created. Go ahead.
Brooke,
Go ahead,
to your point, the guy whose name I was trying to come up with before is Stephen Moore, who Trump had advanced for, I forget whether it was Treasury Secretary or Fed Chair. And Stephen Moore is a complete hack and a yes man. And so will Kevin Hassett. I saw that Kevin Hassett is claiming that he will not take orders from Trump. But, I don't think that we need to even speculate about that. Of course he will. And he hews to that company line all the time.
Yeah, no, it's Trump is not going to hire anybody who will disagree with him. I mean, look what happened to Marjorie Taylor Greene. The moment, and the same with anyone else Mike Pence, anyone who disagrees with Trump even fractionally is suddenly a terrible person, a horrible person, a traitor. Trump's behavior is a sign of a mental illness. As we've had John Gartner on our program, Dr. John Gartner and Dr. Stephen Duckett on our program, such behavior is not normal. Trump's behavior is simply not normal, and Trump is not going to hire anybody who will disagree with him, which is why in each position of authority and responsibility are incompetent people who will agree with whatever Trump says and do whatever Trump wants. And Trump himself is not competent, and he is unfit. And hence, the United States is in a very serious position in the world today.
Yep, no doubt about that. And since we have a minute or two, we're going to let Scott go on about. Hey, Scott, how about that $12 billion to bail out those farmers?
Yeah, I mean, so, and a lot of people are saying, "Hey, isn't that socialist?" And in a sense, it is. But in a larger sense, again, this is a rentier state at work. The farmers happen to be first in line rent seeking this time around. Trump had destroyed their sales market, which was largely dependent on China. China has gone and found other markets to other farmers to buy from. Trump claimed that he was getting the Chinese business back, but China hasn't acted on that as yet. And the farmers are hurting. I think a lot of farmers have already sold their farms. A lot of them, are stuck with huge bills that they can't possibly pay. And this bailout is simply a Band-Aid that will no doubt be applied more to red states or red counties that Trump depends on for votes. And all I could say is that the farmers don't seem to learn their lesson. They did really well under Joe Biden. They would have done very well under Kamala Harris. And instead, they vote against their own best interests. And this is what we get: a disaster situation where they need to be bailed out, and the amount of this bailout is not nearly enough to sustain them.
No, in fact, he was the head of the soybean, whatever was on.
Caleb Ragland,
yeah, and he basically said, he says, you're putting a Band-Aid on a gushing wound. He goes, this won't even come close to being able to fix this. We appreciate the $12 billion, that's great. But in the long run, this doesn't do anything for us, other than, like Scott said, it's a Band-Aid. And you're right, Scott. They voted against their best interest. I know that. I feel for farmers because it's a hard job. But this is what you voted for, guys. This is what you voted for.
He made no secret about it, right?
And there was no secret.
Yeah.
And all it took was a little bit of forethought to say, hey, if he was actually to do this, this would be bad for us. You know who your market was. You knew where your market was, especially soybean. You knew it was China. And what's the first thing he did when he got in office the first time? Started a trade war with China. How'd that work out for you? So you vote him back in, and now, again, the definition of insanity, hoping to do the same thing over and over again and hope for a different result. This is what you've got. I mean, I know I don't want my tax dollars going to bail out farmers, especially when this is a self-inflicted wound on their part. I could think of an awful lot of other programs that are important to me and my family that I'd rather see. Like, I don't know, school lunches, something like that. Better lower health care premiums. That works pretty nice. There's just so much more. But instead, we're busy bailing out the farmers, and again, it's not even enough. For what? For why are we doing this? And Scott's exactly right. That's socialism. Whether you like it or whether you don't, that is socialism. So I think we got that one.
And USAID as well. Oh,
Absolutely.
we're going to get rid of this.
I'm glad you brought that out. Right? The USAID used to buy a lot of produce from the farmers to distribute overseas. They lost that market.
Yep. And, again, it goes back to last week's podcast about soft power. That soft power was the backbone of our farmers' income. I mean, it truly was. Because the government buys this stuff up and uses it. And they use it for soft power. So, when somebody says, oh, soft power is going to, how does it help the United States? It helps us. I mean, it truly does. And I think it's something that, again, sorry, guys, you voted for it. I feel bad for you. But
Mark, the guy you were quoting, Caleb Ragland, who's the
Yeah.
president of the American Soybean Farmers Association,
Yes.
freely admits that he voted for Trump 3 times.
Yep.
Wow.
And
Well, remember,
Trump has
Scott
screwed him
Bessent
every time.
Every
says
time.
he is the soybean farmer.
Yep.
I'm sure he's willing to help out.
Rentier statism. You don't have to produce goods. The government is going to take in tariffs. We're going to use that tariff money to pay for you. It's tax right now. It's taxpayer money. It's not tariff money. But we're taking taxpayer money and we're giving it to you guys in lieu of you doing your jobs. That's socialism. But if this continues in the direction that I think it's going in, that everything is signaling that it's headed towards, we are going to become Venezuela, the Saudi Arabia, Russia. And I'll tell you one thing, Mark, I was curious about this because you mentioned that a lot of stuff doesn't get made in Saudi Arabia other than oil, and you're correct. They are trying right now to diversify. They are actually a steel and aluminum creating economy as well. Now it needs a lot of help. They're, I think, 4th or 5th in the world right now in terms of production, but they're getting a big boost from Trump, who's putting tariffs on aluminum and steel from other countries like China, and not those countries, not Saudi Arabia, not the United Arab Emirates or Dubai or whatever it is, who are also getting into that market to try in an attempt to diversify.
Yep.
So interesting times we're living in.
Yep. And that's what countries that are looking to the future have to do. And this would be a great example. If Saudi Arabia was to put tariffs on aluminum and steel, because they're trying to from the imports of aluminum and steel, that's what tariffs are for, so that their industry in their country has what would be an unfair advantage, and they're allowed to then grow. That's what tariffs are for. But at least they have the infrastructure, at least, and like you're right, Scott, they are starting to do the diversification, but it doesn't happen overnight. They still have to build these things. They still have to, there's just so much to get an industry where it needs to be a global powerhouse. And that's where you bring tariffs in. So,
yeah, and there's a company, and I can't remember which one it is, that left the United States. They also had a plant in Germany, and because everything was too expensive in the United States, they closed their operation in the United States and are now doing all their manufacturing in Germany. And I don't know if it's a car company, but they're doing all their manufacturing now in Germany and selling. I think they're selling to Canada. It was a Canadian program that I was listening to, but that lost American manufacturing in the United States and lost business jobs in the United States. So we're actually losing manufacturing and losing manufacturing jobs under Trump, instead of the reverse, as he had touted and is still touting how wonderful everything is, and giving the economy A+++ with 5 pluses after it. When he was asked how his handling of the economy was, how he rated it, when he had an interview with, I think it was someone from ProPublica just yesterday. And I had to count the number of times he said plus. I mean, he is so beyond
A+, yeah, A+++++.
Yes, right. And remember, Tori, when we talk about will this help prices come down, you're forgetting affordability is a Democrat hoax. Right. That doesn't exist. Just something to leave you with.
Yeah, and the word doesn't exist either. We talked about that before. Yeah. That the word doesn't even exist. That is so ridiculous. Anyway.
Yes.
So
all right.
Thank you. Thank you, Tori, so much for your question.
And that's all the time we have for today's episode. The Nova Society is a production of Nova Society Media, a division of the Phoenix Research Institute. We want to thank our production partners, Buzzsprout, who hosts the Nova Society, Audacity, our editing team, Apple Podcasts, the largest source of podcast and music online, Spotify, the most popular platform for the Nova Society, and iHeartRadio, your destination for all things music and podcasting. The Nova Society is available on all of these and other quality platforms listed in our description. And most importantly, we want to thank you, our listeners. Without your support, the Nova Society could not be possible. If you haven't already, please consider subscribing on the platform of your choice. It's easy, it's free, and helps our channel grow. For questions or comments, you can reach us at nova.society.podcast@gmail.com. So on behalf of Dr. Brooklyn Ann Weldon, Dr. Scott Gershwer, and all of our production partners here at the Nova Society, I'm Dr. Mark Bound. Remember, the true power of society is knowledge. Thank you for listening, and we hope to see you again next time. We'd like to thank our sponsor for this episode, the Phoenix Research Group, an independent research consortium dedicated to providing solutions to social and political issues for NGOs and international government agencies. Through multidisciplinary, nonpartisan, and unbiased research, the Phoenix Research Group advances understanding and practical strategies for complex challenges. The Phoenix Research Group is a division of the Phoenix Research Institute, the producer of the Nova Society podcast.